Welcome to the daily insights that matter. Like the unpredictable wind, macroeconomic headwinds can cause revisions in growth projections from global and domestic rating agencies. In this context, the IMF has come out with a report that projects India to be the fastest growing major economy but has revised the growth downwards for the fiscal year 23. Let's discuss these numbers and compare them with the other economies. Before we begin, do understand that the IMF uses the fiscal year for India's GDP growth projections while it uses calendar year for the other economies. India's growth is expected to decline from 6.8% in fiscal year 23 to 5.9% in fiscal year 24 and then pick up to 6.3% in the fiscal year 25. However, from the chart, India is still expected to be the fastest growing major economy while the global growth rate is projected to decline from 3.4% in 2022 to 2.8% in 2023. After India, China is expected to grow at 5.2% in the year 2023 and drop to 4.5% in the year 2024. Interestingly, Saudi Arabia, which was the fastest growing economy in 2022 at 8.7%, is now dropping to 3.1% in the year 2023 and 2024. India's economy is facing some challenges right now. Rating agencies are revising their outlook, inflation is higher than usual, and monetary policy is tightening. But even in the midst of all these headwinds, India is still on track to remain the fastest growing economy in the world for the next 2 years. And despite these challenges, there are plenty of reasons to be optimistic about the future. Credit growth is strong, banks are maintaining high asset quality, corporate earnings are looking up, GST collections are reaching record levels, the manufacturing sector is in expansion mode, to name a few. Apple's iPhone exports from India have surged nearly 4 times to cross the 5 billion mark, which is equivalent to more than 40,000 crore rupees in the fiscal year 23. Let's discuss this. Apple has become the first brand to cross the $5 billion export mark from India as the company scaled up its manufacturing operations in India in the last few years. India's overall smartphones exports have crossed $10 billion for the first time in a financial year. Apple is leading the race with exports of more than $5 billion, followed by Samsung at $3.5 to $4 billion. On a yearly basis, Apple's exports have grown almost 4 times as they have ramped up manufacturing operations. India now accounts for 5% of the total iPhone production, up from less than 1% in the year 2022. Previously, the Indian government had given clearances to Chinese companies to set up joint ventures in India to expand the local value chain in iPhone and electronics manufacturing. These contract manufacturers are also entitled to the incentives under the PLI scheme for smartphone manufacturing worth 39,000 crore rupees. Additionally, Taiwan-based company Foxconn has an order to make AirPods for Apple, for which it plans to build a factory, investing more than $200 million in India. The Indian government has been pushing for local manufacturing in a massive way as it plans to make India as a manufacturing hub. The local value addition to iPhone manufacturing by India is expected to reach 50%, at the same time become self-sufficient in electronics manufacturing. The Make in India initiative and the PLI scheme are shaping India to reduce reliance on China by other economies. Apple at the same time is working towards diversifying its manufacturing base amidst continuing geopolitical tensions. Going forward, lower input tariffs, flexible labor laws, and better trade facilitation will only make it better for India. So what does all of these news mean for you? While we remain cautious of potential economic challenges in the near future, India will retain its tag as the fastest growing major economy in the world amidst various challenges. This will have an indirect positive impact on you. India is making efforts in reaching its goal to become a manufacturing hub with the Make in India program going strong. This will bring value addition and lead to more exports, making India self-sufficient in electronics manufacturing. This will have an indirect positive impact on you. While I say this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.